Welcome back to Taiwan Outlook. Our guest today is the Vice Chairperson of the Mainland Affairs Council, Dr. Chen-Yuan Tung. Dr. Tung, we've been talking about the economic prospects of China, but the genuine concern that some people have over China's economy is the so-called bubble up of China's economy. Do you think there's a possibility that this bubble may just, blow up, in the future?
Well, there's quite a big possibility on this issue, because over the last 4 years, the Chinese economy has been increasing very rapidly, but again, Chinese economy has been very imbalanced.
Yeah.
That is generally speaking, 80%, more than 80% of their products has been in a status of so-called deflation. Only 0.7 or 0.3% of their products has been in a status of inflation.
Yeah.
So most products has been overproduced, oversupplied. But then a lot of investment has focusing on very small figures of products.
Yeah.
For instance, steel or cement or some other energy industries. So the Chinese government has faced a very difficult job. On the one hand, they would like to cool down all the economy, but on the other hand, they cannot cool down the whole economy.
That's right.
Because only very few items of products have been in a status of inflation. So we can see their investment has been very inefficient.
Yeah.
In terms of so-called incremental capital output ratio, in 1980s, their ICOR, incremental capital output ratio, was around 3.6%. And then in 1990s, this ratio increased to 3.8%. And then in early 2000s, this ratio increased to 4.2%. That is, you need to use 4.2% percentage of capital increase to produce 1% of output. That is, your investment has been inefficient over time.
Yeah.
So this created a lot of problems. And then if we look at the bubble issue, you can see a lot of investment concentrate on real estate sector,
That's right.
as well as in the stock market. For instance, last year, China's housing price increased by 10.2%.
Yeah.
I still remember that in 2004, the Chinese government worried about the so-called bubble in the real estate sector.
Yeah.
And that year, their price has increased by 10.8%. But now, after 4 years, their macro control policy, then the housing prices
Still
continue to increase at very rapid paces.
Yeah.
Furthermore, if we look at the stock market, this will be more serious.
Yeah.
Before 2006, the stock market index in Shanghai as well as in Shenzhen was around 1,500 in Shanghai and Shenzhen respectively. But then after 2006, this index has been increased in a very incredible rate. For example, by the end of 2007, the index has reached as high as 6,000 for Shanghai stock market. And then for Shenzhen stock market, this index has reached as high as 1,500. But then afterwards, it has been reduced for more than 30% since early this year until now. So this will become a very serious risk for Chinese economy. This is not healthy. And then the Chinese government would like to maintain prosperity of their economy. They don't want to, let this kind of bubble burst before the Olympic Games, because they would like to maintain a very stable society and a prosperous economy in China. So this is a very difficult job. On the one hand, they would like to maintain stability, but on the other hand, they also realize that this kind of bubble might burst in the future. If they did not control, if they did not maintain balance, then this risk will increase.
As you rightly point out, that balancing is very important. But apparently, there are trade-offs between different areas. For instance, in terms of real estate price, money goes in there. But on the other hand, we are trying to make sure that people houses should be more affordable to the people in China. So the problem is that how can they balance the two? And more importantly, people are concerned about the post-Olympic economy in China. In other words, the bubble may burst in the wake of the Summer Olympic Game. What's your take on that?
Well, according to Chinese survey, for more than 20 major cities alongside the coastal areas, their housing price in the first quarter of this year has been increased by double-digit growth rate. All of them.
Yeah.
So you cannot imagine for the last 4 years, this kind of rapid increase of their housing price has made a lot of people unaffordable to buy house for their livings. And this will become a social problem for China.
Yeah.
But furthermore, the problem is not that the Chinese government can control the situation and even cannot manage the problem. According to Chinese senior officials early this year, for last year, more than 80 billion US dollars has flown into China as hard money to put speculative tax or speculative investment in the real estate sector. And a lot of money also flow into the stock market. So you can see the Chinese government try to maintain a very stable, balanced economy. But unfortunately, this is beyond Chinese government control, beyond Chinese government capacity of management.
But apparently China is now interdependent with the whole world economy right now. So its relationship with other countries, with the other markets are also very important. And with the growing of the Chinese economy, they have been concerned about this kind of China taking away all the jobs from other countries. So that creates a lot of problems. What do you think about the Chinese economy in terms of jobs in other countries?
Previously, I mentioned that the Chinese economy has been a miracle because it increased very rapidly. But on the other hand, this also brings a lot of risk and uncertainties for Chinese economy. And also, Chinese rapid growth also brings some pressures, we shall say tremendous pressures for other countries. For instance, for the last 4 years, Chinese exports increased at the pace of 30%, even more than 30% a year. And then this also brings a lot of trade surplus for Chinese economy. For example, in 2005, Chinese trade surplus increased by more than 220%.
Really?
That is an incredible rate for all countries in the world. And then even last year, the growth rate has been declined over time, but still, the growth rate was still at 50%. So this is very high rate for all countries in the world. So this also created a lot of disputes among countries, particularly between the United States and China. China currently is the largest trading surplus with the United States, and also created a lot of pressures on U.S. economy because a lot of investment has been attracted from the United States to China. So on the one hand, the Chinese economy has exported a lot of products to the United States. But on the other hand, the Chinese economy also attracted a lot of investment from the United States. So this created a very serious problems and disputes between China and the United States. So that is why the United States continue to put pressures on China to revalue its currency.
But you just point out that many of the issues or problems are now related to the value of the China's currency, renminbi. But China has been resisting to readjust or reappreciate its money. What's your view on that?
Well, after 2002, U.S. dollars has been declining, which has been depreciating over time. But before 2005, before July 21st, 2005, Chinese yuan has been pegged to U.S. dollars.
That's right.
That is why Chinese yuan has been depreciating over time compared to other currencies. So this created problems for many other countries because Chinese economy, Chinese exports have been increased so rapidly. And the United States, Japan, and Europe has exerted a lot of pressures on China. So finally, on July 21st, 2005, the Chinese government made a so-called 3 reforms package on their currency value. On the one hand, the Chinese government appreciate the renminbi by 2.1%. But on the other hand, the Chinese government also linked renminbi exchange rate into a basket of currencies. And finally, the Chinese government also relaxed the currency valuation space, bending space. So this created some opportunity for Chinese yuan to be more market-driven instead of government-controlled exchange rate. But after 2005, actually the Chinese government continued to intervene seriously. For instance, in the second half of 2005, Chinese yuan only appreciated by less 0.5% for 6 months.
Yeah.
So this created a very serious concern from other countries. Then after 2007, the Chinese government, under international community pressure, the Chinese government adjust again their pending space for Chinese yuan. So this created some opportunity for the renminbi exchange rate to be more market-driven instead of government control.
But let me ask you a simple question. Do you think that the renminbi now is undervalued?
Of course, because currently, according to the market estimate, the renminbi exchange rate has been undervalued at least 7 to 8% for 1 year.
For 1 year?
Yeah.
Okay.
You know, according to the forward rate on non-delivered forward rate, the renminbi exchange rate has been undervalued tremendously. And this is continue to bring a lot of pressures on the renminbi exchange rate.
But the thing is, if China appreciates its money, its currency, what would be the domestic impacts on its economy?
Well, this might bring some negative impacts on their export competitiveness.
Yeah.
But again, we need to look at Chinese economy in a very delicate situation. You know, more than 55% of China's trade are so-called processing trade. So this is not a pure trade.
Yeah.
A lot of foreign invested companies in China inputs or intermediate goods from abroad, and then processed in China with Chinese laborers or lands or some other inputs. And then afterwards, these companies export to other countries. For instance, Taiwanese people has been contributed to more than 72% of Chinese high technology exports.
Yeah.
So this is a global commodity change. So if Chinese government revalue its currency, this will not bring so much negative impact on Chinese economy.
That's right.
But again, if Chinese government continue to maintain this kind of space of appreciation of renminbi exchange rate, then this will bring a lot of speculative attacks on Chinese yuan, and this will attract more foreign hard monies into China, and this will again undermine seriously Chinese monetary supply independence, and so that will put more pressures on inflation and also economic imbalance in China.
Yeah, but you just point out that economic ties between Taiwan and China have become more and more closer over the past decade or so. So if China's economy is that kind of a period of uncertainty, what would be the possible impacts of Taiwan's economy in the future? So when we come back, we'll talk about the growing economic ties between China and Taiwan. And stay with us. We'll be back after these few moments.